Good day, fellow investors. I continue with discussing the suggestions from my research platform members, and Niels said an analysis of interactive brokers would be interesting. I took the first look. I saw that I know the business, I used it, I even promote it sometimes here on this channel as a good global broker, so I said, why not make an in-depth risk and reward stock analysis. If you enjoy this, smash that like button. We'll discuss immediately the stock, then discuss the business, the financials, the risk and reward, and what am I going to do with the business there. First thing that one can notice is that over the last decade it did really well. Of course, quantitative easing, zero interest rates, and then especially after 2020, people sitting on their couches, watching YouTube financial videos, thank you, and investing the money they got from their government. So there were many positive tailwinds, and the market cap is now 35 billion, the PE ratio is 15, and the dividend yield is low because the management is keeping the money to give more safety to customers. Similar thing to what Warren Buffett does with keeping a lot of cash, so that whenever you deal with Berkshire, you know it's the safest counterparty. Interactive brokers, 14 billion in equity, they are compounding that equity to give more safety for more customers, for more growth and more scale. Now on the stock, don't get confused, the management owns 74% of it and 74% also of the affiliates country per country as they are likely structured. So don't get confused, these are the membership interests, the stocks, okay, publicly held, and then they have a minority interest, but you just take into account this for the 34 billion market capitalization. So we have a low PE, growing, leading position in the environment of online trading. Let's check the business. Now before we go on, if you go to this video, you just go lower. And this is also an explanation of the business or the previous video that we did. If you go into the description and if you click here on my link, I get a few bucks for every click, so you support the channel, but you can also check the broker and what they are doing, what is their positives, their everything, so you can see how it fits you, and we'll discuss that more. But of course, apart from the fee I get from you clicking here, just for the click, you don't have to become a member, I also wanted to discuss this because it shows how the business is growing and how it became the leader. Not through crazy things, but just this, influencers, links, advertising, online advertising, so keeping things low cost for large scale. And that has allowed them to reach 2.3 million accounts, constantly growing. Of course, the equity also depends on how the market is going. I think they are now already at 13 billion equity, and there are 150 market centers, 34 countries, 27 currencies, practically every market out there you can trade 24/7 practically on interactive brokers. They have a lot of financial strength, so no long-term debt, no risk there, and yes, they hold the assets, they are holding the stocks in their name that you own, but that is simply an asset and a liability at the same time, so it fluctuates how the market goes. The goal is to continue to grow, the population is huge, digitalization, everything. They have customers in 200 countries and territories, 3/4 located internationally. So as the globalization world continues to grow, they should have a bigger and bigger market, and as the Fed and others print more money, there should be more and more money to trade, especially with inflation. They are the low-cost broker, so margin loans much cheaper than any other. So if you want to trade on margin, you go there. Plus, if you have cash, they give you up to 4.83 on the cash you're having, unlike other brokers. This has allowed really a quadruple in client accounts, and of course similar in client equity depending on how they invest. But if you look at the reviews, best online broker from Barron's, Benzinga, Investopedia, so really a lot of awards and everything, because yes, they are global, they offer a good platform. Perhaps the trading platform is not as user-friendly as it might be, but it has the power to do a lot of things. They make money on commissions, they make money on the spread between what they get on their cash and what they pay their customers, on the margin loans, interest, and that's how a broker works. Metrics from the last quarter, a little bit, let's say, down. So of course the pandemic has passed, thus nothing stellar, no crazy growth, but here is client equity 1% lower than prior month. Okay, that depends on the market, but 2% higher, 1% lower. Client accounts, however, 22% higher than prior year and 2% higher than prior month. Check it out if you haven't by clicking on the link in the description below. Then I have read the last conference call, and they are working on launching new things. They are working on international market access for hedge funds, trying to work with more brokers, offer their platform to those brokers. So a very interesting way to grow, and long-term investing accounts in Hungary and things like that. When you are online broker, you can simply scale the technology and the software that you prepare for one country on the other 200 countries, and that is their advantages, as they are the leader in now, first mover advantage, and it's hard that others reach them. Of course, it can always happen. We always have to check the competition and how it goes, but for now they are the leaders. Now let's take a look at the financials. How they make money, what's behind that P ratio of 15, and is it sustainable? Okay, first, every trade you make, they get some commissions, except for US people that get also free trading, I think, with 4 or 5%. But that is the US. But then you also have interest income on the cash they have and on the margin loans and other loans for what they have to pay. If you allow the broker to lend your stocks to other customers, then you get 50% of the cost of lending that the one borrowing your stocks to short or something gets. So they need to also pay for that in interest expense, and they need to give you the 4% or 3% on your cash. So there is always the cost there, but total net interest income 637, which is double the commission. So they make more money on the interest rather than on the commission. Total net revenues 1 billion, that is much higher than last year in the same quarter. As I said, the structure is such a way that the management has non-controlling interests, but okay, everything is then divided whether by 400 million shares or 100 million shares for common stockholders. So don't get confused there. I didn't find anything crazy there. It's a little bit more complicated, not direct, but okay, just accounting. So commissions, net interest income, and here comes the first risk that one has to watch. Total net interest income is the key, 6%, let's say, rate on loans. And if we look at the margin loans, that is 39 billion. 6% of 40 billion is 2.4 billion. If I compare that to the quarter, okay, of course, we have interest income on loans, interest income on the cash balances, but divided by 4, this is already half of the interest income. So in case there is an issue with margin accounts, in case there is a drop in the market, we could quickly see the interest income go much lower. Of course, the interest expense would also go a little bit lower, but these revenues of 1 billion could quickly go to, let's say, 700 million, and that would really hit the broker, the profitability and everything. So the risk would be here a crash in the markets. And also, if they are giving you 3.83, 4.83, a change in interest rates, for now they are spread, they are getting 5.3 on the treasuries and bank accounts. If they are doing 4 on average on 100 million of deposits, that's a billion in spread a year. But that could also go away. But the key is, I think, the margin. So the risk is their margin collapsing, clients closing the margin accounts, losing money, bad market, everything goes down, less commissions, less everything. So that is the risk that we have to look for. So I'm thinking now, of course, it's doing good because we are at the peak of the financial exuberance and stocks are still holding. We'll discuss more tomorrow whether stocks can hold for longer or not. But if not, as Buffett is also thinking not, you will see that tomorrow, then you're thinking, okay, maybe there is a little bit risk. And also, if I look at the averages, yes, this has boomed over the last 2 years. But if we return to, let's say, pre-pandemic normality, yes, they have more accounts and everything, but a small reversion to the mean could be interesting. Drop in margins, if the net income goes down for 1.8 billion to 0.9 billion with a P ratio of 10, that's a 9 billion market cap, which is ridiculously compared to this one. Call me crazy, but at 9, let's say 15 billion, this could be something interesting to watch. But then, of course, we would need a crash in the stock price, a crash in the stock market, and then you go and look for these high quality businesses that have scale and are scaling and are profitable. This should be profitable even in a crisis. And you can see here that it wasn't that long ago that it was much cheaper. And because it is a good business, that's exactly why I have included here it on my stock market research platform on the covered stock list. And you never know when it's going to become an interesting buy. I think it's on free preview for a while. You can read the analysis with calm if you want. Check my research platform and see how it fits you. Thanks for watching. Check my research platform. I'll see you in the next video.